Hello everybody, so in the last few months I've made several videos with regards to David Hunter, and in those videos I summarized his reasons why a melt-up in this equity market, and in particular in the stock market, would be the final explosive bang that this bull market would end with. And with those videos it was always kind of a future prediction, that in the next few months or weeks that this could happen. But right now I believe that the technicals, macroeconomic factors, and sentiment has just shifted from hesitant or neutral to extremely bullish, and we will finally be able to observe this explosive final rally that Hunter has forecasted. Today I'm going to discuss what these factors are and why I think we will see much higher highs in the stock market in the coming days. Hi everybody, welcome back to The Contrarian. For those of you who are new here, my name's Logan. I really like to talk about overall success in investing, and most of all going against the crowd in order to outperform the market. So if you get to the end of this video and you feel like I've earned a subscription, just consider subscribing. And I will also make a disclaimer that this is not trading advice, even though I'm going to be talking a lot about technicals and where I believe that the market is headed in the coming weeks. This is not to be taken as advice. And also, it's impossible to predict the future. I've definitely been wrong before. Everyone's been wrong before. I have been right before at certain times. And also, this is not a long-term event Hunter is forecasting, but rather this is the explosive end to a historically long bull market before a major crash. So this definitely is not a long-term market move. So now to get started with why I believe the final melt-up in the stocks has just started. First, technicals closing out on Friday of last week were extremely bullish for all major market indices. Now a brief introduction to technicals and reading candlestick patterns. A green candle is bullish, and it indicates a higher close to the day or week or minute or whatever period of time the candle encompasses. Now for the sake of this video, I'm looking at the daily charts for all of these indices. And as you can see on this visual, green indicates that you opened lower than the closing price, and the two ends of the wick also display the intraday high and the intraday low. And a red candle on the other hand, is bearish in that it shows that you opened higher on the day than you closed, and again it shows the intraday high and the intraday low on both ends of the candle wicks. Now a red candle like this shooting star candlestick would be seen as very bearish, as it shows that you closed lower than where you opened, and it also shows that a large amount of selling took place when you came near the intraday high, as shown by the long wick on the top of the candle and the relatively short wick on the bottom of the candle. And this green hammer candle, on the other hand, would be seen as extremely bullish as you closed higher on the day, and more importantly, when the candle broke significantly lower, large amounts of buying took place and drove it back up, leaving a long candle wick underneath the candle. So now with that out of the way, we can take a look at the daily candles that all of these major indices just had yesterday on the daily charts. And just looking at these, they all look extremely bullish. Mainly the Nasdaq and the Russell 2000 have a distinct green hammer candle. So just with the technicals, these are definitely signaling a bullish move. And obviously this is not, forecasting in any potential unforeseen events, but assuming that everything stays as it is, these are signaling very bullish moves in the future. So the technicals are very strong on these charts, and they appear poised to move sharply higher. And now I don't look only at the technicals, but I also look at the macroeconomic factors that drove markets back up during the intraday on Friday. Because remember, they were all down significantly up until the midday when they took off due to a better than expected job report that came out. And the markets also essentially forgot about the worries of the previous few days that were brought on by Jerome Powell. And just remember, no chairman of the Federal Reserve wants to be remembered as the one who was the cause of some large crash. And this oftentimes leads to very intelligent people saying some very obviously false claims. And Powell, though he is a very smart man, essentially was saying things everybody who has taken an economics course of any kind should know is false. For example, the major worry that the markets had was from a press conference on Thursday in which Powell said that while he thinks inflation will rise as the economy reopens in the coming months, he believes it will be temporary, and he thinks it isn't a long-term threat. And now anybody who has simply observed the actions of the Fed for the last 10 years, and especially the last year, would say that this is not true. That when inflation does actually start to increase, that there is a significant threat of it getting out of control just due to all of the monetary injection the Fed has done at an ever increasing rate. So on Friday, the markets essentially shrugged this off, and even though all these investors and people behind the markets, even though they probably know that this temporary inflation is not likely and that it's more likely to get out of control, it appears that they have just accepted that, reopening the economy will only produce temporary inflation. So although that is a very irrational move on the part of the market and investors, it is still a bullish sign, at least for the short term. And this is also likely a very bullish indication for the stock market and what will likely drive the coming melt-up more than pretty much anything else, and that is investor sentiment and investor psychology, as well as crowd thinking. And I like to go, as you know, I like to go against the crowd, but that doesn't mean that I don't, predict where the crowd might go next. And we all saw recently what happened, once the video game retailer GameStop began breaking to new all-time highs, and essentially it went parabolic. It was in the news all over the place. You couldn't really go anywhere without hearing about GameStop and GameStop stock. And people who had never invested before were all of a sudden downloading these trading apps, opening brokerages accounts and buying shares at these ridiculous prices that GameStop stock had reached. Now, where I'm going with this is that we saw very recently how quickly investor sentiment changed on GameStop. Before this rally, the sentiment was very pessimistic. In fact, it was the most shorted stock at the beginning of its squeeze. But once it started going parabolic, so many of these people watching on the sidelines began being overcome by all of the craziness that was being reported. They heard about people turning several thousand into millions on call options, and that's very possible that happened just with how crazy the moves in this stock were. And this began to get the better of these investors on the sidelines. These investors always, want to be with the next big thing, whether that's been Tesla over the last couple of years, which has also gone parabolic, or any of these SPACs that have, come out that are nowhere near justified valuations. They're way overvalued, but bottom line from all of these examples is that investor sentiment can shift very quickly, and when it does, it could drive these current market indices to new all-time highs in a very short period of time. Think about what would happen if all of a sudden investors who have been sitting on the sidelines begin seeing the markets jumping up day after day to new all-time highs, along with all the social pressure potentially from friends or family who have just made, a 20% return in several weeks just by being in the NASDAQ, not trading at all, just being in the market. And this could lead to even more buying and essentially a stampede to get into the markets. So I do see investor psychology and the shifting sentiment as probably the most bullish cause behind this coming melt-up. Now, it obviously won't be near as dramatic as what happened with GameStop, but it still could be a nearly vertical move on these long-term charts. Just looking back a year ago at the crash that occurred in February and March, this was a basically vertical drop of 35% that occurred in roughly 6 weeks, and that kind of move was previously unheard of for index funds. But that was also driven by investor sentiment shifting from bullish to bearish. So now we could see the exact opposite in the coming weeks, with markets shifting from skeptical or neutral or wherever they have been to extremely bullish, as investors who have been sitting out of the market since last year finally begin to jump in, for various reasons, whether they're rational or irrational reasons. Maybe they think that inflation's going to heat up really quickly and they need to, get out of cash, or, whatever their thinking is. This could lead to a real stampede getting back into the markets. And now we have to get to the reality of the situation, and this also leads back to David Hunter's prediction for what follows this melt-up, and that is a severe market crash. Now, what could trigger this market crash, you might ask? Well, it could be pretty much anything unexpected at that point. It could be rates rising as they have in the last several days. It could be a Federal Reserve misstep. It could be the Fed tightening on an extremely overvalued and very bubbly market as they see inflation, rising much faster than they anticipated. Or it could be merely investors finally coming to their senses and realizing that the current valuations at the top are not justified. So my advice for you is that regardless of what you decide to do, whether you decide to sit this out or you tried to ride this wave to the top, is just to be very careful. You know, kind of like what happened to these past examples I talked about with GameStop or Tesla or the markets last spring, is that when this melt up happens, it will likely be very quick and short-lived. You know, we're probably not going to stay at these high points for very long. And you definitely do not want to be one of the people who bought at the top right before it crashes. So I hope that you found this video valuable as to why I believe in the coming days and weeks we will likely see a strong reversal of the markets to break to new all-time highs, and why this melt-up will likely come before we get the final crash. So if you like these kind of content, just consider subscribing if you want to hear more. I will probably continue to talk about this in the future as this unfolds, but yeah, if not, I hope you enjoyed this video, and I hope to see you again.